Hello everyone. 2026 can be the year, the tipping point of GenAI in banking. And let me explain why we believe so. So, as we all know, GenAI has been and still is at the very center of the banking industry. So the leadership teams in banks are very focused and interested in see how this is evolving. And this is normal because it's expected, as we all know, to be a transformational and disruptive technology. But so far, implementations have been more centered in individual productivity instead of broader, bigger process and functions taking over of that. So, and let me share with you the reasons we see for that to happen. So we see like three roadblocks for this expansion of GenAI in banking so far. The first one is the lack of predictability. It's very hard for banks and for regulators to have a system in the bank that you have the system, and with the very same inputs or very similar inputs can provide or might provide very different answers. This is not acceptable for banking functions, and specifically the ones that are more customer-facing, the ones that interact with customers, so affect customers' reputation, and obviously regulatory oversight that wouldn't like that, right? This is and actually, I heard many times, and I fully agree that many banks would rather to have these GenAI systems a little bit less creative and more automatistic. So that's to prevent this difference in the outputs for the same input. The second roadblock we see is the lack of transparency, and this is pretty important in banking because you have a black box and you don't know how it works inside. And you only send questions and receive answers to those questions. But you know how this box thinks, and you don't even know what data was used to train the model. So you don't even know this bias or something, and you need to trust. And in banking, you cannot trust. You need to make sure you have to make sure because it's part of your obligation with your customers, of course, and your regulation. And with regulation, you need to control all those things. And it's even worse with those models that are, again, black boxes from the transparency standpoint, and thinking about some frontier models. And because you even have to send data to those models that are hosted outside the bank boundaries. And this is something delicate in banking because there are several risks, of course, but if you call an API and you send customer data through this API to this API, and this data goes to a different infrastructure, and you don't even know how this data is going to be processed, this is like a red flag from the risk perspective. You don't want to do that for customer-related activities. And for internal activities, that's different. Something that obviously frontier models are very, very valid and powerful for those use cases. The third roadblock we have seen so far, in terms of how this is not expanded yet, is the lack of governance. If we categorize, simplifying a little, of course, the use cases in three groups. We start with the ones that require a human in the loop. So you have the GenAI model that is part of a system that is performing one step in a process, let's say, simplifying that. And you have a human between the first and the second step of the process. You have a human that is seeing the response of the model and understands, and he or she is the person that decides if has to move on or change something. And typical use case for that in banking is wealth management advisors, financial advisors, that many times they are already using GenAI tools to gather information and summarize information of the markets and even draft recommendations for specific customers. But you have a person, a human in the loop, that is processing this information and can decide what information is valid and what information is not valid. And this is one of the categories. The second category is the human on the loop. So you have a person that, in the same example I mentioned before, step 1 and step 2. So it's not a person that needs to trigger the second part of the process. It's a person that is like overseeing the outcomes of the first step of the process and can decide if she or he wants to stop there the process. A good example for that in banking is like a payments officer, right? When you have these treasury management processes in, that companies, corporations do through banks, then you can see money movement and suspicious activity, and maybe the Gen AI system flags something that looks suspicious with a yellow flag. Okay? And there's a person that is notified of this yellow flag and can decide if move on or stop it. Let's stop it. Obviously, by default, go on because it's a very sensitive time for these kind of transactions. And the third category is the human out of the loop. That is what everybody wants, right? So when banks get into Gen AI, what they want, what they are seeking, is to have as many as possible in this block, without human intervention. But again, this is something that for now is very exclusive for internal use cases, something that happens and is used internally in the bank and is not affecting customer data or something like that. And maybe it's going to be difficult to go farther in the short term, given these the several risks that are entering into action here. This is what the roadblocks we have seen so far, and what's coming in 2026. The reality is that we don't think that this is going to change a lot in 2026 because of several reasons. Technology will evolve. Regulators will be more savvy in those things and probably will raise the bar in terms of the requirements for banks. So we don't see these roadblocks will change dramatically, but we still believe that will be a tipping point of Gen AI. The reason is that the number of use cases and the quality of use cases is growing a lot. And this is pushing banks to go to the next level in terms of the professionalize the use of this technology. So let me split this in 3 trends for 2026. The first one is the pursuit of simplification. So we will see very soon many banks having many different models with many different sizes, these models, on different infrastructures and with different accelerators integrated with applications. And this is an increase in the complexity in terms of how banks manage this technology. And this will make them to have a unified platform for both AI and applications, and unify DevOps and AI Ops practices, tools, and processes overall. So that's one of the big things that we will see in 2026. The second one will be the growth of open source AI. Also, as a consequence of the roadblock I mentioned before about the lack of transparency and the lack of predictability, but especially transparency, open source AI will bring this openness and visibility in data in open ways. That will make banks and regulators more comfortable on using open source AI for being aware, for knowing what's happening inside these models. And probably we will see some use case for smaller models using open source AI, for instance, in KYC, that you want to know, if a customer is accepted or not. You want to understand in the customer onboarding why this customer was or wasn't accepted, and this is something that open source AI will be able to provide. Also, there is a digital sovereignty angle. As many of you know, digital sovereignty is becoming more and more important in several parts of the world, and open source is a guarantee for banks to keep ownership of this model and making sure that nobody can switch them off. That's something that's important in banking in some parts of the world. And the third trend for 2026 is a cost efficiency focus. For now, banks have been focusing experimentation, implementation, piloting, and the things. But once this scales up, the cost of inference will become the biggest part of the cost share in terms of AI, and then that will make banks shift from cost insensitive mindset to being very efficiency focused, and I think it's a normal thing once things scale up, right? So these three trends, pursuit of simplification, growth of open source AI, and cost efficiency focus, we believe that will be very present now in 2026. And by the way, we believe that this is pretty, again, normal, because it's a big disruption, and every big change in technology always start with isolated pilots and technology, then go to bolted on compatibility or collaboration with the rest of the bank. And the third phase, that is the one that we are going to enter in 2026, that will require these platforms and those things, is the built-in inside the bank. So integrating the AI with the regular application development in banks. And these are the trends we believe we will see in 2026. Let's see if at the end of the year it really happened and how much, but these are our thoughts. So thank you so much for listening. Thank you.